Hey everybody, it's your old pal Brian Hunt. Welcome to another episode of 60 Seconds of Risk. And today I want to talk to you about the benefits of properly and routinely rebalancing your portfolio, which actually will allow you to sell at the high point and buy at the low point. And let me walk you through this and why you want to do this. So here's a mock-up of a portfolio which actually reflects one of my funds. And in this situation, I like to go with a mixture of heavy on equity, but a little bit of bonds, and having access to both U.S. stocks at 60%, international stocks at 20%, and bonds at 20%, which gives me a complete 100%, which is what makes sure your numbers add up. And this is the percentage of investment mixture I'm willing to do as far as I believe in the long-term benefits of stocks, outperforming inflation. Stocks historically outperform all other classes over time. And if you got a long-term horizon, 20, 30, 40 years, you really shouldn't worry what's going on in the marketplace. Like right now with the tariffs, we're seeing a lot of drops in equity prices. But again, the whole point is to set up your portfolio to meet your long-term objectives, focus on your objectives, but you want to stay on top of your portfolio to make sure if it goes a little cattywampus, you can readjust. And let's talk about an example. So I do my rebalancing always in January, and then I'm also look at it again halfway through the year if it needs to be adjusted again. So let's look at kind of an example where my portfolio was sitting June of last year. So June of last year, I had everything balanced because I just done rebalance, put everything at 60, 20, 20 to meet my objectives. Then at the end of the year of 2024, and quite honestly, what I do is I wait for my rebalance. I do it like in the middle of January. So on all my dividends and capital gains to get distributed and reinvested back into my account. So I wait for a couple weeks after and 12/31, make sure everything gets brought in. And I viewed my portfolio. And at 12/31, my U.S. stocks are doing great. I predominantly do S&P 500. In the past 2 years have been on a tear. International stocks were off a bit. It doesn't mean they were down. It's just that the U.S. stocks were getting more of the portfolio, and the same thing with the bonds. So looking at that, I said, you know what? I'm a little off, so I want to get it back into rebalance. So what I did, roughly, I pulled $30K off the U.S. stocks. So I sold $30,000 of the U.S. stocks, and since it's been going very well, I sold at a high point. Then I diversified back to roughly putting $10K into international stocks and $20K into US bonds. So as you see, negative 30 plus 10 plus 20, 0. I didn't take any money out of my account. I just rebalanced it so that now my percentages go back to where I want them to be. This helps me reestablish my portfolio to the parameters I wanted to. I'm selling my winners and I'm buying my losers. And if you have anything to know about investments, it's the value play over the long term to really get your money. I've readjusted my portfolio and I go back to sleep at night knowing I'm still meeting my long-term objectives. Now, like I said, I always do this once a year, middle of January, but then I'll go back and reassess it in the middle of June for sure, halfway point, just to see if anything's gone off cattywampus. And typically, for me, if my percentages are off 2% or higher, then I'll make that adjustment. If it's less than 1%, it's really probably not really worth it. But here's the deal. Don't try to do this on a daily, monthly basis. That's stupid. You're trying to time the market and you're going to get transaction costs. It's not worth the point. Your long-term objective is the point. Now again, I typically look at halfway point, 6 months. If it's off quite a bit, I'll make the adjustment. If it's not, I'll let it be. I know right now there's a lot of fear going on because what's going on with the Trump administration and jacking up tariffs, they're going to drive the economy into a recession. Again, know your long-term horizon. Now, if you're really getting concerned about what's going on right now, should you really be that heavy into equity? Me, I still got the long-term plan. I'm not worried about this. I've seen things come and go over my years. I'm confident that the arrow goes up and to the right for stocks, so I'm not too worried. I'm still going to go aggressive on the stocks. But you need to know your risk tolerance. You need to know what your plan is, and make sure you're mix here is going to meet your objectives. Like all things, guys, I hope you found this beneficial. If there's a certain topic or individual you'd like to see on my show, please post a note on LinkedIn or send me a message. You can subscribe to this video and all of my other videos on my YouTube channel. You can find the links to these videos on the website formerly known as Twitter, Substack, Facebook, and now Blue Sky. Until next time, guys. Bye.